Mukarimaka, whichever part of the world that you are in. Good morning or good evening, and hope you've had a good weekend so far. This is the Global Market Review. We are back after a little bit more than a month. We had the last one on 28th of June, 2026, and today is the 2nd of August, 2026. A lot of what we discussed in the June session did happen, though it took a little bit of time. So we're going to quickly review that, but most importantly, a lot of interesting action has happened in the markets in the last 1 week in the global markets, and we will cover more or less the entire part of the world, all the major markets that can be freely traded by most people where it's possible, and look at how the interconnections are and what the big opportunities, if any, are there across the world, right? So this is the global market review. We are reviewing US markets, European markets, some Asian markets, China, Japan, South America. African markets, not really, because it's very hard for people who are not resident in Africa to trade those markets, even from uh, uh, European or an American based broker. So we're going to skip that. But other than that, the rest of the markets are freely available to most people in at least the first world countries, right? Okay, and before that, before we jump in, a point to be absolutely noted that we are doing this session at about 7:45 p.m. India Standard Time on Sunday, 2nd of August. And the important reason for that is what you are seeing on your screen, the headline that Trump has called off the Iran strikes subject to some deal being reached. Well, whether deal is going to be reached or not, this has happened many times before, so it's like sort of cry wolf maybe, but this definitely changes things because 24, 48 hours back, there was the question of some massive bombing that might happen that Trump was considering and voiced his opinion also. And then now there's a complete U-turn. Apparently, MBS from Saudi Arabia phoned up Trump and expressed his reservations, and there were other reservations, strong reservations expressed by some of the other Gulf countries, because Iran really promised to retaliate and retaliate hard and strike US assets and interests within the Gulf, especially. Well, whatever it is, it's definitely a backing down. So that definitely plays into the sentiment of the markets. Energy prices cooled, or crude oil prices would have cooled off, and this news should perhaps give a small kick, if not a big one, to the the global equity markets, right? Okay. So with that caveat, because if Mr. Trump changes his mind, then, well, things can rapidly change, as we already know very well from the last few months of market action, right? Okay. So quickly jumping into generally what sort of is the benchmark and leads the rest of the world, the US, and you're looking at the Dow Jones Industrial Average, the main index. What we had mentioned, if you remember in the previous global market review, which we did a month back, was that there were a lot of head and shoulder tops that were forming. And at that time, of course, they had not broken down, and we're going to review that as we go ahead. But what happened in the Dow Jones is that it came to the neckline on Wednesday, right? And that was a pretty sharp sell-off, about more than 2%. But on Thursday and Friday, we had a sort of a mild recovery at least. And that was mostly on account of some good results by Amazon and Microsoft. Those stocks did really, really well. Just to see how well some of those stocks did is outstanding. If you look at Microsoft, it went up a massive percent. Look at that. It went up 15% in one day, and then another 3% on another day, 18% over 2 days. So that's the level of recovery that happened in some of the stocks. And who knows, Microsoft could be, going back to its life high. And so the AI, what do you say, bubble or not? Well, burst, not burst. There's some talk now that profitability is happening. And if you look at what Amazon did, it went up 15% in one day. So these are like big heavyweights in the US markets, as we very well know. And these have come out with stellar results. And that just turned the sentiment around in the US markets at least, right? Okay. And as you will see as we go down the list, that this sentiment then rippled across the rest of the world. All right. So excellent. I wouldn't say index recovery, but yeah, the index Dow Jones at least did not break down at the neckline, though it very well threatened to do that with the sort of huge red candle, that bearish candle that it formed on Wednesday. Right. All right. Now, if you look at, however, the Dow Jones composite, right, and then that really, took some time. It has made a rounding top, has sort of, if not exactly broken down, but there, and the recovery, at least in that part, is really not that strong. So we are there, but what will happen in the coming week will be interesting to watch. That's clearly a rounding top that is there, and the rounding top is about 2 months in duration. But if you look at the SPX, right, the S&P 500, the big, much wider basket, the head and shoulder top that we had mentioned about in June, right, went, and then broke down, and then again this recovery has happened. So you could say a false breakdown of sorts, though I do know that some people who followed up on the global market review of last month made actually some good money trading some short positions in the US market, right? So congratulations to those of you. You know who you are. I'm not going to take any names on a public webinar. All right, so SPX sort of broke down, but then recovery happened. Then the tech-heavy Nasdaq index, that really broke down, right? Clearly broke down. And that's the effect of many of the AI stocks and tech stocks going down pretty much. And then you have this recovery, but please note that this recovery is bringing it back to the neckline, right? So this is a very unusual, and I would say very interesting, definitely interesting situation, where you have some of the main indices that have sort of broken down but not broken down, and some that did not, like the Dow Jones Industrial Average, right? But the Nasdaq did break down, and then you've got this recovery. Now, does it go back to the neckline and then we see a further move down, or is that it, right? So that's really going to be interesting to watch. So clearly a split market in the US, right? There are some in the wider basket, non-tech stocks, and apart from the main frontline Amazon or Microsoft, which are definitely doing well. That's why the DJI went up. But on the technology side, we definitely have weakness, and that weakness, at least on the basis of technical analysis, cannot be ruled out as having disappeared. This could be a retracement, a test of the neckline as a resistance, and then we could see further downsides. So if you are trading the US markets, you need to be very clear which side of the market you're trading and why you're trading. That is definitely a splintered market, right? And if you look at the Russell 2000 index, right? So that rounding top, just like the Dow Jones, but hasn't really, broke down, you could say, but again has recovered. So it's there on the borderline, and falls cannot be ruled out. So we may be just looking at a bounce here, and the market then continues to go down for some time, because it's really had a good rally for almost 2 3 years, and in the sense of a time-wise correction, nothing meaningful has happened. So and the top formations, the top patterns, rounding tops or head and shoulder tops, are not completely cancelled, definitely not, and it'll take a lot more market action to know whether they're cancelled or not. And then so we are sort of on the, I would say, 50-50 side of the, as far as the US is concerned, at least. Going north to Canada, Canada is like, I mean, I've asked this earlier. If any of the Canadian market just seems to be rallying and rallying and rallying. It's done exceptionally well, and not yet no sign of a top formation. And this is a weekly chart of the TSX, but still, it hasn't followed the US markets or any of the other markets to show weakness, right? Though, at least as far as the RSI is concerned, one would be a little um, cautious, because the RSI at least is indicating a bit of caution for sure. A bearish divergence, at least on the daily charts, is sort of playing out, and you've got these very small, teeny weeny candles in the daily chart of the TSX for the last 2-3 months. So market action becoming, the bearishness, the bullish pressure is definitely weak. Can't say the bearishness is building up, but the bullish pressure has come down for sure, right? Coming across to Europe and going to Germany, right? The German index almost life high on Friday, right? Really amazing that Germany, and as you will see, the rest of the European markets are quite resilient. And we've said this in the last GMR also. They have definitely been very, very resilient. And that's partly because of the um, defense push, the need for their own self-reliance, not to depend on America, on the issue of NATO and what could happen. So there's a lot of fiscal loosening and a lot of spending pressure that's happening, at least on the defense side, and definitely opportunities there. Same thing with France, the CAC 40, and that's again just like the DAX, almost looking at making life highs, which it may very well do on in the coming weeks, all the European markets and the rest, because of what Trump just said, right? So even without that, if you're going to be purely technical, a bit of a caution like a double top or a tweezer stop could be said. This is a weekly chart on the CAC, and a similar setup could be definitely there on DAX, right? Double, triple top. So bit of a caution, but I think the bullishness is there, and there's at least sentiment that's going to perhaps push the European markets up. Same thing for the CAC, sorry, for the FTSE 100 index. You can see, again, the tweezer stop just there, and does this weekend development on the Middle East push it up? We'll see. We're not very far off. We are about maybe 12-15 hours away from knowing that. But most likely, looking at the setup, looking at the sentiment, things are looking bullish. The Nikkei, okay, this is very interesting, and I need to spend some time on this. There's a very interesting development with the US Fed intervening in the Japanese yen currency market. This was after Bank of Japan also entered into the fray. And just let's very quick look at that, because this is quite unusual for a move like this to happen. So as far as the Japanese yen is concerned, there's a huge appreciation or depreciation, depending on how you want to look at it. It fell from 163, 164 to a dollar to 157, and all that happened in just 2 days, right? And that's massive. That's a big move. If you're talking about a move of about 4% on currency in 2 days, that to something like the Japanese yen, and of course this has happened before. You got a 2% move there, but this was clearly based on intervention by the one of the two of the almost the two of the largest central banks in the world. What was very unusual is the amount of intervention that US did, and this is for the first time that the US Fed has intervened as on the side of the Japanese currency. Otherwise, it was just the Bank of Japan's job, and many theories running around about why this was happening. I'm not going to get into that. Maybe a separate webinar is warranted for that, but very interesting development. And because of that, because of this, because of the yen uh, effect, right? So you've had some different move on the Nikkei index. So it was initially falling, and then it just recovered very, very nicely, right? So all sorts of issues, complex issues, balance of payment, trade between America and Japan, and how things could affect each other. And also, the two banks decide to coordinate. The European Central Bank was also kept in the loop, and you've had this really nice recovery on Friday, which was a 4% recovery on the index, which is like for a Japanese index to go up 4% in one day is absolutely it's quite an amazing feat, right? So um, clearly it was heading down, and then you had this intervention that happened. Can't say that the fall is over. This could just again be a bounce. You've got the 20 and 50-day moving averages literally sitting on top of each other, and that could provide some resistance, as it did on, if you look closely, as it did on Friday, and the market, retraced from that. So see the, candle on that, the top wick went almost there, and then came back, right? So the high was 65,364, while the moving average is at 65,524, right? So that's like 364, 524 on 65,000 base. It's like you're talking about a fraction of a percent, right? So, and sometimes they just go exactly to that number and come back. So some amount of, so this will be interesting to watch what happens with the Japanese market in the coming week, 2 weeks. Uh, does it, all this currency thing get forgotten, and does it continue to rise, or are we going to face resistance and then it goes down? Looks like it probably will rise for at least a day or two or three, and then we'll have to review, right? But just to reiterate how the Japanese market went up a good, what is this, 80% in 2 years after it broke its life high. And we called that out on a webinar we had done about 2 years back. So any of you trading global markets and international markets and took advantage of that, congratulations to you, right? And there are certain similar, not 80% opportunities, but some global opportunities are still there now. Of course, not in Japan, but elsewhere. Um, Right. So because I've been looking at this actively and also looking to see how participate in the global markets using various vehicles through US, I just have on my list um, the Japanese Nikkei denominated in US dollars, right? Because what are you going to do with yen if you're not in Japan, right? Okay. Okay, let's skip this. This is the MSCI Japan Index Fund, just tracking the index very nicely, right? Coming to Asia and across the other side of the planet from north to south, you have the Australian market, which is, well, not really going anywhere, just going sideways, sideways, sideways for 2 years, and it continues to do that. Nothing much to write home about. Definitely some local factors at play. And well, uh, I'm not very closely tracking that, so I don't have any more comment. But technically, it's just a sideways market. Now, coming back north to Asia, and really rapidly going across the world. This is the Shanghai Stock Exchange, and that's been correcting. This is a weekly chart, right? Okay, let's go to daily, and you see that it's been correcting, and really nothing happened, right? All the other stuff that has happened in the global markets, US doing what it does, then Europe doing well, Nikkei, correcting, but has done very well for the last 2, 3 years. But this market, the the Shanghai market is really being laggard. But at the same time, there is this to be said that it broke out of this 10-year symmetrical triangle. And remember, I mean, you're talking about a 10-year symmetrical triangle. These are not things that play out in days and weeks. It take months to play out. So, and the Shanghai life high was in 2007. We are still 43% away. I mean, you have to rise, the Shanghai exchange has to rise by 43% to reach there. So this is for people who really have some sort of a multi-month, multi-year type horizon. This is something to you want to keep track on and get in at an appropriate time, right? A lot of talk about the Chinese economy being a little bit in the doldrums with employment issues, real estate issues, and maybe a tech bubble and other things, and manufacturing being bloated and inefficiencies. That'll clear out, and then at some point you're going to see a move. It's not there on the charts right now, but the opportunity from a longer term perspective is getting created, and that'll take weeks. But this is something that we called out, and it has really, really done well, which is the Hong Kong market, right? So the Hong Kong market from its very lows of June, okay, and we did the webinar in 2 days after this, has risen 15%, and that's 15% on the index, right? If the index rises 15%, that's in a month, right? You can be sure that individual stocks have done really, really, really well, right? Um, but even if you're just a long-term index trader or an ETF person, that was a good return to be made within a month. Overall, still sideways. This is a trading market, not a investing market. But yes, it is something that it has still got legs and is going to play out. Just as a matter of um, letting folks know, uh, probably going to be very actively digging into the Hong Kong market on specific stocks and sectors and looking at very, very specific opportunities there because the Hong Kong index, the Hong Kong Stock Exchange allows foreigners to invest in a completely, you know, it's like they don't, there are no restrictions, there are no hurdles. It is very seamless, and you get a proxy for Chinese companies in the Hong Kong exchange, right? So some of the big ones that are listed in China, the Baidu and the Alibabas, and now a lot of robotics and AI. Chinese AI companies, right? There'll be some sort of presence in the Hong Kong market. Much harder to get into the Chinese for Chinese market for a retail investor, but no such restrictions in the Hong Kong stock market. So we'll be looking into that. So if you are interested specifically in Hong Kong, Europe, US, and some other countries, do let us know, and we probably have something that could be quite beneficial, I would say, right? Though I'm sticking my neck out for that. Anyhow, so Hong Kong index, the overall market, of course, from a multi-year perspective, has really gone nowhere. Long way to go before it goes back to its life high, and that itself is another almost 20%, 30% up move. Whether it'll do that is, well, obviously dependent partly on China, but it's a trading market, right? And if you are uh, even when I say trading, multi-day, multi-week, maybe multi-month opportunities, yes, definitely something to look at. What is definitely interesting and perhaps surprising is how Singapore has done. It's just been making life highs and life highs and life highs for the for the entire 2026 and 2025. This is really interesting that how well rather the Singapore exchange has done just in this last 3 months, right? The Singapore exchange has risen a good 15%, almost 14% has been the rise. Okay, now being a little bit on a correction for sure, no doubt about it. You also have a bearish divergence, which has definitely happened on the Singapore exchange on the daily side. right? And definitely overbought, very strongly overbought. So maybe some sort of a time and or price correction or both is on the cards. But this is impressive. So again, if you are either a Singaporean resident and a Singapore investor, or you're a global investor and were trading Singaporean markets, there was some really good money to be made in the last 3, 4 months. Right now, I would be a little cautious about Singapore overall, and would definitely book my profits if I was there. Then looking at what is one of the most interesting things that has happened for a long time, the South Korean market, the Kospi is up 17.9% in one day. This is a one-day move of one of the world's most important stock markets, right? In one day, it went up 17, 18%. And this was really led by two stocks, Samsung Korea and SK Hynix, which went up 30% and then got blocked in circuit. Right. This was driven by, again, Microsoft and Amazon news that the AI thing is not all hype, is not all a bubble, and there's substance to that. So not only that, it has been severely sold off, and the index itself has fallen 43% in about 6 weeks. That's a huge sell-off, right? So it's a combination of a technical bounce plus a lot of short covering on the market, and which was triggered by the excellent news that came out from Amazon. So as I'm saying, what happened in the US showed up here, and then the whole sentiment and the whole mood has completely changed, right? By the way, the South Koreans are one of the biggest retail investors in the SpaceX IPO, and they just piled into it after the listing. Those who could not get it drove the price, but of course, SpaceX is now down. I think below its issue price also, right? But yeah, that's how the South Korean market is. So this is exceptional, and the only other precedent I can think of a move like that was in India, and this was in 2009 when the UPA government, United Progressive Alliance, led by the Congress, came out with an overwhelming majority in the elections that were there in 2009, and the Indian market went up 19-20% and had to be closed for the rest of the day. So the uncertainty, and of course, it had been beaten down at 2008 because of the global crisis. And then 2009, they got this unexpected election victory for the incumbent government, and then the Nifty Indian market just took off. Of course, this is not the same reason, but then a 17% move on yes, the big difference, of course, is that the Indian market move was across the board, but this Kospi is driven basically by two stocks which have 50% weightage, which is Samsung and SK Hynix, right? Okay. Moving on to something which is an interesting find in Asia, and that is sorry, this is the Taiwan exchange, okay? And the Taiwan exchange, this is not the interesting find. So this is doing a very large head and shoulder, and this is from May, June, July. So 3 months, a breakdown, and then it is now attempting to move back up. Again, this neckline, watch, it has gone up, no doubt about it. So is the breakdown over? And can we expect the Taiwanese exchange to rally up? Who knows? Quite possible. But technically, strongly overbought even on the monthly chart. So again, I would say there is room for abundant caution as far as the Taiwan market is concerned. This is really, you know, this is what traders love. If you're a good trader, and I'm not even saying intraday, multi-day, multi-week, great opportunities and action possible. If you are a longer term investor, it's a bit, well, forget it and shut it and gut wrenching. You just have to bear with the volatility that is definitely there on your portfolio, right? Okay. Right. Okay. Mm, is something. Yeah. Right. Next. Moving on to Indonesia. Right. So this has caught my attention simply because of the setup, right? This is a really interesting setup with a move that the Indonesian market made. Well, I had marked it, right? So added plenty of stuff to my watch list after I was given a heads up on this. And there's a very simple, reason for that, as you're going to quickly see. The Indonesian market made a 24% move. It was in June, right? In 1, 2, 3, 4, 5, 6, 7 days, right? This is and this is the Indonesian market marked in dollars, right? So a 24% move in 4 days, and then it's just been a consolidation after that. So and the Indonesian market on top of that or prior to that had really broken down. You have a very nice resistance here, and then you have a very nice oops on a index to get this sort of a, again, textbook technical analysis or technical pattern. This is clearly an ascending triangle. I mean, is I don't know. It's breathtaking. Call me mad for saying something like that, but sure. I mean, this is exceptional. And remember, the market has fallen a good 57% in the last 3 months. Sorry, 3 years, right? So that's a huge correction that happened in the Indonesian market since 23, right? 57% correction in 23. And then after doing a 53% correction, I don't know why, we need to love to get any inputs if anybody has as to what happened in Indonesia during this time. And then a 24% move from the bottom in 3, 4 days, and then a consolidation. I think this market technically and probably backed by some fundamental shift in the Indonesian economy is being set up for a move that could be very, very profitable and lucrative in the days ahead. Now, if I'm going to just look at this now, of course, how do you trade the Indonesian market? That's a whole different question, and we're not going to cover that. Do get in touch if you have any queries on that. But even 87, 90% return from where it is now, right? To if it just goes back to not even its life high, to its resistance level for a good, I would say, 10 years, 10, 11 years. That's a huge move. And thereafter, what happens? So if you're a positional guy, a long-term guy, if you remember what we discussed on the Japanese index, the Nikkei. I don't know. I'm not saying this is going to happen in Indonesia, but then it's like very tempting to know that that something like that is actually possible. And when an index does that, wow, that's just wow, right? So this is something that I'm going to be very, very closely tracking. And of course, if you would like to, stay in connection and get updates, not on a webinar, but on a, WhatsApp group chat, etc., then definitely, this is my contact information. Get in touch, and let's roam the world and seek opportunity wherever it presents itself. Right? Okay, that's the job of a global investor or a trader, right? Products are there, markets are there, money moves freely. You need internet, you need your computer, and you need analysis and the conviction to, of course, to get into what these setups are offering. All right, super. Now, getting staying in Asia, looking at Malaysia. Malaysia really not doing anything in a very, like, you would say, in a sort of exciting manner. But you can see that since 23, it's in a nice uptrend channel, right? And then it's very much sticking to that, though the market itself has been sideways for since 2014. So bane of Asian markets, I guess, that in the last 10, 12, 14, 15 years, they've really not made money like the European or the American markets. But again, from a trader's perspective, plenty of opportunity at the index level, mind you, right? Okay. Looking at, I think this is Vietnam. Yes, this is Vietnam, right? Um, Nice big move. I wouldn't say there's anything very thrilling here. If you were looking for oversold opportunities, they were there and it could still go up. But I mean, I think we've also already found some really good ones in Vietnam, maybe in Hong Kong, and what else? Yeah. So why look at anything less good, right? Uh, Coming to, okay, after a bit of globe-trotting, we'll come a little bit to still stay in Asia, of course. Let's see, is there anything interesting here? I don't want to make this unnecessarily long. We look at Philippines. Yes, Philippines is interesting. It's been in a consolidation since Feb 2025, right? So you can very clearly see, of course, it's a longer consolidation. I can definitely take this back. But there's strong consolidation specifically from early 25 to now. So that's like 1.5 years. Now, has this set up a base? This is the weekly chart. And you could say a longer consolidation that's been happening since 20. So 5, 6 years of consolidation. Um, Pure price chart. I don't have any volume on this, but by the looks of it, yeah, technically one could argue and make a strong case that there is build-up happening. Base has been set up for a potential up move to happen on the Philippines exchange. And if you look at the Philippines index in dollar terms, you're seeing very much the same picture, right? So as a matter of fact, if you look at this on the monthly chart, you've got 1, 2, 3, 4 bottoms. And if you want to count this, I wouldn't, but four, so quadruple bottom, strong bottoms happening at about 800. Okay. And then very unlikely to break unless something very radical happens. But if it moves up from where it is right now, you're talking about a pretty substantial move that could happen in the next, who knows, 1, 2 years, right? And oops, that's the wrong software tool. We're talking about 50% move on the Philippines exchange. Well, right. So, hey, why not? Right. So I know people in Philippines. I sort of indirectly know people in Indonesia. So this is something that goes out to all of you. You really may want to look at your opportunities that your markets are presenting to you there. Nifty, as a matter of, we did a very detailed India market review, so I'm not going to get into that, but complete change in sentiment on the Nifty. Again, more or less a range bound index. India has been nothing. I know it's a busy chart. Sorry if it's a little too overwhelming, but essentially since 24, the Nifty has really not gone anywhere. So for about 1.5, 2 years, we've not seen any overall moves, though individual stocks have done well. And then maybe the Nifty is, going to do something this year. Most there's another 4, 5. Well, at least for financial year basis, we've got another 6 months almost, uh, or more. Right? Okay. Um, Coming to the Middle East now, the Saudi Arabian index, which again I've been saying has been showing resilience because it didn't really break down with the Gulf issue, right? Unlike the UAE, Qatar, Kuwaiti indices, um, not it's not out of the woods. It's really struggling to have direction, and there's a lot of overhang. It's just a regional thing, I think, just keeping the pressure there. But as we said, if Trump finds a way to save face and get out of the war, and those tensions really settle down, then the Middle East exchanges is the one place that you could see big, sharp moves that could happen in the coming weeks and months, right? So even look at this. This is the Abu Dhabi General Index, which went up through 2.7% in one day, and then the next day it went up another, sorry, yes, 1.6%. So 2, 3, almost 4% in 2 days, another 5% almost in 5 days, and of course corrected, but showing some amount of strength and bullishness. And I mean, come on, look at this. This is the weekly chart, sorry, monthly chart, and it hardly has, broken down because of the Middle East conflict. You are seeing quite a strong, resilient sideways market, but with almost a 25% channel, and stayed there, right? So UAE doing its very best to manage affairs, keep tensions low within, keep the investor confidence high. All sorts of measures have been taken by the government. And again, if this settles down in the Middle East, this after, well, what do you say here? This is a 3, 4 year consolidation that's been happening in Abu Dhabi exchange. But look at this, right? From 20, it went from 3,700 to uh, almost beyond 10,000, right? So that's almost a 2.5x that happened in 2 years. A big consolidation for 4, 5 years, maybe setting up a base for our next secular move on the Abu Dhabi exchange. Uh, the Dubai exchange, not so lucky, right? Very different behavior, but this is a chart that goes from 2006. Imagine, and to 20 years, and we still haven't seen the life highs coming back as far as the DFM exchange is concerned. But from an investing perspective or a trading perspective, also the Abu Dhabi exchange is looking better than uh, the Dubai market. Right? Okay. Then looking at the Qatari index, Doha, well, again, sideways, sideways, sideways. Qatar and Kuwait are probably the most affected. Small countries, small economies, easy targets, very close to Iran. Not that UAE is not, but yes, again, if markets settle down, or rather the conflict settles down, there could be sharp moves that could happen in these markets. All right. Now, should I not? Yes, let's do that. It's just 3, 4 more indices. Moving across the world again to South America, you've got the Brazilian index, and 15% sell-off that happened because of the May, April, when the war was sort of at its peak, took support on the 200-day moving average. What a beautiful support, right? And then has really moved back up. And I think it's set up for a rally that could really be supported technically by all those long-term moving averages. And from where it is right now, you're talking about a 10% move back to its life high. So if you're in South America and you're looking, well, this is a pretty, excellent setup. Uh, and if you're trading the Bovespa or the Brazilian index, then yes, here you go. Looking at the same thing from a US dollar perspective, yes, not the same chart, but the setup is very similar, right? And it's likely to rise. Okay, looking at uh, Mexico now, and this is the Mexican index. Let me see what did it do in the past. Right. Okay. Fine. It's really doing well. Uh, I think I don't know whether it's attributable to the new president that was elected a few months back or a year back. I'm not sure. And her negotiation with Trump and the U.S., which has been dicey, but she stood her ground, and maybe you know won some, definitely won a lot of credibility and recognition for showing spine, and maybe negotiating well with the US. I don't know. But yes, nothing much to speak of. So let's not make mountain out of a molehill, so nothing there. Mexico, all right. So why is this? Yes, the Mexican index in terms of the dollar. Well, that's interesting. Looking really good. Um, Consolidation, and then maybe wants to go up. The Chile index also very similar, right? Look again. If one wants lessons from history, these are some good lessons to uh, learn and keep in mind as to what happens if an important levels get taken out, right? So this was a very important level, the yellow line at 818, as you saw, multiple years from 2013 onwards. And then when it broke out of that in 2025, it went from 800 to 1,300, right? So almost a 80% move that happened just in a year, 2 years. So, of course, one could not be sure that will happen, but those are the sort of setups that you want to be really looking for. Find good setups, forget the iffy ones. If you're a global investor, you'll always find something or the other. And here's another ascending triangle, again, one which lasted about 4.5 years, played out really, really smart, right? So I would say, history is giving you lots of lessons, and put that onto setups that you find now, right? So that was Chile, and this is Nasdaq Chile, okay, showing the basically the same thing. Now it's consolidating, right? So this is the symmetrical triangle there on the dollar side, but it's an ascending triangle on the Chilean currency. I think it is the peso or something. I'm not sure, right? So either way, more or less the same outcomes, right? All right. So that is the thing for the global markets review. We've covered a lot of the world, and we've done that in about how long? Oh, wow, almost an hour. Never thought it'd be so long. But it's worth it, right? In 1 hour, we covered the world, found some really nice setups and opportunities. Um, uh, just to, yeah, Europe, double lot of tweezer tops. Look at that. Indonesia, look at that. There's something else that South America a little bit, and then you had mm, Kospi. If you're looking at that, yes. So those are the opportunities which are really staring at you in your on our screens. So here we go. Thank you very much. If you stayed till here, really, really appreciate it. Would love to have your feedback. This is my contact information. I send out updates occasionally on the WhatsApp groups that I have. If you have any wish to receive any of those updates, whether it's about a specific market globally or a stock or sometimes just interesting moves or news or developments in the global space that an ordinary individual with a global perspective could benefit from, right? So great. Thank you. Look forward to your inputs, and I will see you in the next GMR. So haven't done one for a long time, but very will quickly do in a couple of days. One on the bullion side, so gold, silver, platinum, palladium, maybe industrial metals, and then look at energy and if there's anything specifically interesting that we find anywhere. So look out for that, and if you want to get updates on that, stay in touch. You know how to get in touch. Thank you very much, and have a great week and a great month ahead. Right? Bye.